Hi, welcome back to Trading Hour. It's been a tough morning of trade, following what has been probably tough weeks and tough months. So, how much of it will be carried forward, or, probably is there some upside ahead? Siddhartha Khemka, head of retail research at Motilal Oswal Financial Services, joins in. Hi, Siddhartha. Morning. Thanks very much for joining in. There are just so many negatives going around, right? The rupee is falling, oil is rising, FIIs are selling, then there's inflation, growth concerns, whatnot. In the face of so many headwinds, where do markets go from here? I mean, is there any upside at all?
Yeah, hi, good morning. So if you look at the overall setup, yes, there are many macro headwinds, and the one especially right now plaguing the entire global markets. So we know what is happening with inflation, and to curb that, central banks across the world are looking at increasing interest rates very aggressively. So if you look at post-pandemic, the entire world economy benefited from and almost record low interest rates. But now that is set to change, and I think that will have some impact in the near-term earnings as well. So far, we have seen that the earnings are the only positive factor in the entire headline numbers that we see. So that to some extent now is at risk that the earnings growth can get impacted by the inflation impacting the operating margins, and B, the rising interest rates. Can that impact the financial leverage and to some extent delay the capex cycle that was just picking up post-pandemic? So I think earnings are still what the market is looking at, and I would say that in this entire environment, if you look at the single biggest risk right now, post whatever correction that we have seen, is that is there any more downside risk to the earnings growth estimate that the street is factoring in. So that apart, I think this is a transitory phase. Once we are set with the global central banks doing their bulk of interest rates hike, market will take some time to stabilize. So I think it's a 1 to 2 quarter of transitory phase. Post then, again, the focus will turn back to the earnings growth.
Said, well, it'll be a little bit of a painful transitory phase, so to call it, with these interest rates going up, uncertainty on earnings. And as you said, earnings is something that's been driving this market. If there's a risk to that EPS, that growth of 15 to 20% we're talking about for the next couple of years, then we could be in a bit of a dicey scenario. But select stocks, select pockets will always give you opportunities. And we were just discussing Maruti. We have UBS that came out with a note earlier today, and they are fairly positive on that one. Now, Maruti, there was fear about market share loss. There was fear about input costs going up. Input costs have cooled down. They are trying to fight back in terms of market share. At these levels, would you look to get into Maruti?
Yeah, so Nigel, if you look at what the company is doing on its own and the overall macro setup, especially for autos, they have been impacted for the last 2 years from the supply chain issues, the semiconductor and chip availability, which is now easing off. Newer capacities have come up for the semiconductors, which is easing the supply chain and helping the overall auto space. If you look at Maruti specifically, they had some product gaps. Now they are trying to fill in. They are coming up with an updated SUV, which is your new Brezza, by the end of this month. They're also working along with Toyota on a new SUV to take on the competitors. If you look at on the cost side, yes, costs have kind of stabilized, and we have seen how metal prices have now also corrected. On its own, Maruti is also looking at ways and means to improve margins. So if you look at the numbers in terms of the direct transportation, in terms of railways, they have the latest update came in that they shipped 2.33 lakh units through railways, which is its highest ever dispatch. This cut down the transportation cost in an environment where the fuel prices are up, transportation costs have gone up. So we expect recovery in the market share as well as margins by the second half of this financial year, which should help drive almost 20-22% of revenue CAGR over the next 2 years. So I think it's a positive setup, and we're definitely positive on Maruti. Even we have a target price of 10,000 from a 1 year.
Siddharth, in terms of discretionary spend, I mean, as of now, there's no big casualty. But going ahead, you expect, pockets in retail to come under stress given that, these COVID cases are now once again rising. I mean, within that space, I think you have Trent as a stock that you like.
Yeah, Sumaira. So I think on an overall market setup, this is a space, the discretionary space that we are still somewhat positive. And within that, if you see the retail, the QSR, the hospitality space, these are some of the discretionary select themes that is still kind of standing out with the strong demand and not much impact of COVID as of now. If you go out on the traveling space, you'll find that most of the hospitals are booked out. Weekends are chock-a-block. The rates, the average room rates have gone up. The same is the case with the retail space. As of now, they are reporting strong numbers. Yes, there could be a risk with the rising COVID cases and restrictions coming back. But I think in the current market environment, that is one space that clearly stands out. And with Trent, if you look at specifically some of these brands in West Side, Zudio, they're reporting strong numbers. The store level economics remains healthy. They're doing aggressive capacity expansion on the store count levels. And our expectation on strong earnings growth over the next 2 years, we remain positive on that space with our preferred pick Trent, on which we have a target price of 1430.
Siddhartha, I wanted to ask you about this energy theme. It was ignored for very, very long. Suddenly you have this war that breaks out. You have a shortage of crude. You have, prices that are spiking up as well. Now, a lot of these stocks on a PE basis, normal financial ratios, dividend yield, they look attractive. The problem is, how long will this party last for those who have gotten? How do you approach this theme, whether it's the refiners, whether it's, the upstream companies? Would you play any of them? If yes, which ones?
Yeah, Nigel, so very pertinent question in today's environment. Energy as a space was in news for the right or the wrong reasons, but definitely it came into focus. Crude at $124. You have the coal shortage globally, which has led to record high coal prices. So I think the risk is that sudden the increased volatility in the energy crude prices, and that's the reason why some of these stocks, especially on the PSU side, you have the upstream oil companies, coal, ONGC and Oil India. Then you have the downstream refiners, IOC, BPCL, but they have their own challenges. Yes, dividend yield is high, valuations look comfortable. But if you look at the overall long-term setup, I think the world is now looking at a newer base in terms of crude oil prices. I don't think we are looking at the $60, $65 average anymore. So if you look, the average expectation is about $85, $90 that most of the analysts would be penciling in their estimates. So that will definitely be positive. Yes, in the short term, if there is any correction in the crude oil prices because of what is happening in US, their inventories, I think there could be volatility. But for at least next 1.5 years, they would benefit from the higher crude oil prices and would report record earnings. Same is the case with coal. I think Coal India and ONGC, these were the two picks within the overall energy space that I would look at. Which would be reporting very strong earnings, and on back of that we would also expect strong payout, because these are government PSUs and definitely government would look at getting those earnings back to them in terms of dividend. So these two would be the preferred choices in the energy space.
Okay, all right, Siddhartha, thanks a lot for stopping by and talking about markets, earnings, and a couple of stocks as well that we just discussed. Well, for the market